So good afternoon, good morning, good evening, everyone, depending where you are. Welcome to today's Future of Financial Information webinar. My name is Michał Zieliński, and I have the pleasure of hosting this series. And today I have the pleasure to welcome Sara Shirley from Middle Tennessee State University, who is our presenter, as well as Josh Lee from Brigham Young, our discussant. And special thanks to Josh for getting up particularly early. He's on mountain time, so 8 hours behind Stockholm. And the topic is task-oriented speech on earnings conference calls. And the format, as usual, is Sara will present for about 30 minutes, followed by discussion by Josh of about 15 minutes, and then we'll spend the remaining time until 5 o'clock with live discussion with the audience. But if you have a question, please don't sit on it until the very end. Feel free to post it in the chat. I will be keeping an eye on the chat, and we'll make sure to get back to your questions when the time arrives. And without further ado, Sara, please, the screen is yours for 30 minutes.
All right, so before I begin, I just want to first say thank you so much, Miguel, for having me here. So really excited to present this paper and be part of the series. Also, big thank you to Josh for discussing the paper. I'm really looking forward to your comments from you and from everyone here. For this paper, we did just go through a pretty substantial revision, so all the feedback is very much welcome. So I'm really looking forward to hearing it all. So for this paper, this is going to be a co-authored paper with Vineet, Bhagwa, and he's at George Washington University. I am Sara, and I'm at Middle Tennessee State, and then Jeffrey Stark is also at Middle Tennessee State University. So what we're doing in this paper is we're applying this linguistic measure called task-oriented speech, and we're looking to see if utilizing this measure, we're better able to understand the way firms craft their message and deliver their message in earnings conference calls, and if that has an impact on market participants' ability to disseminate the information and incorporate it into the market. So I'll get into what kind of all of these things mean in a little bit more detail, but first let's just start off with some of our two primary research questions. So as I kind of briefly mentioned before, we're going to be looking at this way that companies share information, particularly through their earnings conference calls. Part of the motivation for these questions stems from the thinking similar to the SEC quotation that we have here, in that firms need to be able to share information to investors in ways that the investors can understand, so they can then make decisions about investing, and those will then be reflected in the marketplace. So kind of using that as our motivation, we're going to look at this measure, so which we call task-oriented speech, and we're going to look at the impact that it has on two subsets of market participants. So first, we're going to just look at overall market response from investors. So particularly if a firm is using more task-oriented speech, is it impacting the market trading? So first we'll look, I guess, risk and trading. So first we're going to look at if a firm has varying levels of task-oriented speech, is there a reduction or increase in risk as a result of the information being transmitted either more or less clearly? And then for the trading volume, if information is more clear to investors, they might agree on it more, and that might result in a reduction in trading. If the information is less clear, less disagreement, more trading. So those will be the two main focuses that we'll have for market response. Secondly, we'll look at analysts and the impact that it might have on these more informed investors. Again, analysts gain information from earnings conference calls. We'll talk a little bit more about the literature here in a second. But since they are more informed investors, this task-oriented speech may or may not impact their response. And so we also want to look at them separately as well. So a quick overview of our findings, and then I'll get into all of this in a lot more detail, but just kind of set the stage for where we're going. So first we find, looking at the investor response, that when firms are using higher levels of this task-oriented speech, we are finding a significant market response. So specifically what we're finding is that when they use this more task-oriented speech, you're going to have a reduction in overall risk of the stock, so you'll have lower overall volatility. We also find there is a reduction in that idiosyncratic component. So it does seem that when firms are using this method to convey their information in their earnings conference calls, the information is being transmitted more clearly to investors, and then you're having that subsequent reduction in risk. Related to kind of what I was just talking about previously, you do also see a reduction in trading. This again is kind of motivated by the fact that investors are going to agree more on the information, and therefore there'll be less uncertainty and reduction in trading activity. And then looking at our analysts, we're going to focus primarily on forecast errors for them. So we do find that when a firm uses more task-oriented speech, you have a reduction in the subsequent quarter's forecast errors. So it seems that even for these more informed investors or market participants, I should say, it does seem to also make a difference for their ability to kind of disseminate the information from the call as well. And in addition, we look at some secondary characteristics such as smaller revisions, lower disagreement levels, and lower uncertainty for the analysts as well. So I guess the main takeaway from the paper will be that this task-oriented speech measure is important as a measure for being able to capture the overall way that the message is being conveyed to the market participants, and the way that these companies frame their information to investors can have a significant impact on participants' ability to process and incorporate that information. So I'm just going to touch on some of the research that's relevant. There's a lot of various research we talk about in the paper. I'm going to highlight just a few of the more relatable research here. So first, we're going to have the research that utilizes word lists. So again, this is just a couple of them that we focus on in our paper. So we'll have the sentiment analysis from Warren and McDonald, and then also their uncertainty measure. Sentiment is the normal tone measure that you think about, so more positive, less positive. And then uncertainty is the inclusion of words from a list about how confident or uncertain the text or speech might be. These measures, as I mentioned, are going to utilize a word list. In our measure, we're going to be using parts of speech tagging, so a little bit different. So with these measures, it's whether or not a specific word was included from the list, whereas we're going to argue partly that this parts of speech is going to better capture or not be, I guess, tied to the specific word being included on list or not. There are a secondary set of literature, such as word count. So that's just going to consider how long the message is, so the speech or the written text. And so whether or not that has an impact, we're going to control for this. And we also are going to relate and control for reading grade level. So this is how complex the sentences are in those type of characteristics within this text or speech. And then lastly, I of course have to mention scripting. So Josh, again, I'm really excited for his discussion. His paper looks at whether or not managers stick to a specific script as within the Q&A portion of a conference call. And so that spontaneity or lack of spontaneity has an impact on or a signal that's being conveyed to market participants. With our paper here, I'm going to talk about this more in a second, but we're going to focus on the main discussion of the earnings conference call, so the primary pre-scripted portion of the call, and whether or not the firm crafts that message in a certain manner, if that impacts the ability of market participants to be able to gain information or gain the information more clearly. So what is this measure? So I keep talking about task-oriented speech, but let's get into a little bit of like what it is, where it comes from. So in this first slide, I'm going to just talk about kind of where it comes from. In this next slide, I'll talk a little bit more about like how we actually calculate it. So with this measure, we're going to, again, move beyond just a specific word list. And we have this measure from Race and Wilson and Leach. So this is going to come straight from the linguistics-based literature. And what it's going to do is it's going to help capture whether or not oral communication, so speech, is going to have more task-oriented manner or not. So you can, again, think of it as more task-oriented. It's going to still account for some spontaneity in there, but it's going to be more formal, potentially more direct, as opposed to less task-oriented, which will be more on the conversational, less direct spectrum. Again, we're not using a word list. So the goal of this isn't to capture whether or not a firm says a particular word, but instead what we're looking to do is how the overall message is being able to be interpreted by these market participants. With this, so you can think about it, if you have two firms that are going to be sharing information, if we assume that these firms have the same tone in their message, the same information that's being conveyed, but if they have differences in how they convey this information, So if one of them does it in more of a task-oriented manner, as opposed to the other one, does that impact the market participants' ability to be able to, again, absorb and kind of understand that information, then better be able to kind of respond subsequently. So and again, it's not getting into that specific word, did they use it or did they not, but again, how this message is being interpreted by investors from the company. How do we actually get this message? So or how do we actually get this measure? So for this, we're going to be combining the computational linguistics, so again, that kind of setup that we had from the Race and Wilson and Leach paper, and then we're going to be using natural language processing machine learning to just make, or to be able to create our measure. So first, as I mentioned previously, we use parts of speech tagging. So this is again going to be identifying the various parts of speech, so noun, adjective, preposition. And so how we do this is we're going to use NLTK. So that's just a program that's going to allow us to study the different, or identify, I should say, the different parts of speech. In doing this, we're going to use a set that is pre-trained, so it's going to be trained on the Wall Street corpus, or Wall Street Journal corpus. So what this is going to do is just have it so that it understands how to identify certain parts of speech. We can then take this and apply it to the earnings conference calls. With this, or using this natural language processing method, we're able to identify these words dynamically. So this example included on the slide hopefully helps convey what I'm talking about. So you could have the word past. If you were using a word list and you had the word past, then it would be a set meaning for that word. Here with this kind of dynamic approach, it can look at the different words that are surrounding it within the sentence and then be able to differentiate between if we're past is being used as a noun, if past is being used as an adjective, or if it's being used as, for say, a preposition. So this dynamic approach allows for hopefully a better capturing of these words, which we can then apply to this task-oriented speech measure. So again, just a little bit of a more advanced in the technology that we can take advantage of here. For our sample, so our sample is going to have just over 60,000 conference calls. These are going to come from Seeking Alpha, and we have just over 3,600 firms. With our data, we have IBIS is of course going to give us our analyst information, CRISP, CompuStat, the firm statistics, and then the other one I want to mention is option metrics. So we're going to have that towards the end of my presentation. I'll briefly mention it, but we're going to control for implied volatility. So that's going to be where that comes from. And then the last thing I want to just touch on here in the sample portion is, again, we're focusing on those prepared remarks. So for the earnings conference call, you're going to have the main discussion, which is the pre-scripted portion of the conference call. And then you also have, of course, that Q&A portion. So what we are wanting to do here is we're wanting to focus on those premeditated, the pre-scripted prepared remarks of the company. The reason for this is we want to know if how the company presents and conveys their information to investors impacts their ability to understand and incorporate that information. So we don't want to be influenced by the spontaneity of the manager or potentially the questions that are proposed in the Q&A portion. So instead we want to focus on that pre-scripted portion and how that message is crafted and conveyed to investors. So getting into some of our analysis, so our first tests are going to look at the investor response or the market response to potential changes in task-oriented speech. So first, we're going to just look at the total risk or overall volatility of the company. Our task-oriented speech measure, the raw version is going to go from 0 to 1. For our analyses, we're going to put it into deciles and have it go so that the coefficient can be interpreted as moving from the lowest to the highest decile impact on the risk or the risk response, I should say. For our control variables, I have some of them listed here. The main ones I want to point out is we are controlling for some of those linguistic measures I mentioned before. So we have word count, readability, sentiment, uncertainty. Of course, other control variables, we do cluster errors. And we do have also some fixed effects in there. So we'll have like firm fixed effects, industry fixed effects, day of week fixed effects, just to make sure we're accounting for those as well. So for this first table, we're finding that when a firm uses more task-oriented speech, we are finding that significant reduction in risk that's following subsequently. So if you look at column 1, you're going to have the response over the subsequent 10 days, column 2, 20 days, column 3, 60 days. So for that first 10 days after, you're having that decrease of 1.15%. So there is a significant and economically meaningful reduction. And this impact does seem to be carrying through the following 60 days. So it's not just an immediate response in reduction of risk, but it seems to carry through that 60 days as well. So what this first table shows us is that if a firm is using more task-oriented speech, it does seem that the information is being conveyed to the market participants in a more clear manner. And this is resulting in less uncertainty and a lower subsequent level of risk. In table 4, what we do is we want to just, again, kind of reconfirm that we're not just picking up something else that's already in some of those linguistic measures. So in table 4, what we do is we're going to double sort. So we'll sort based on some of the linguistic measures. Here I show you guys sentiment, but we also in the table have 4 panels, 4 total panels. We have sentiment, number of words, reading grade level, and uncertainty. For just simplicity, I stuck with just one of the panels, so it's a little bit easier to read. But they're all structured the same. So we'll first sort based on those linguistic characteristics, and then we'll sort based on task-oriented speech. And then presenting here, we're looking at the difference in the total risk. So as we move from high to low task-oriented speech, or I should say low to high task-oriented speech, we are finding, again, that significant reduction in risk. So even looking at the varying levels of sentiment, we are still finding that reduction. So again, hopefully further supporting that this task-oriented speech is picking up something different and having a significantly different impact on the market. As I mentioned, that last bullet on the slide does also show a similar pattern for those other linguistic measures as well. So just for simplicity, I just stuck with the one measure here, but you're having a 9% reduction by number of words, moving from low to high task-oriented speech, 10% for reading grade level, and almost 8% for uncertainty. We next split our risk measure into systematic and unsystematic risk components. So here what we find is that for task-oriented speech, you are having, again, as firms use more task-oriented speech in their primary, the main discussion of their conference call, we are having a significant reduction in that idiosyncratic risk component. So there'll be less of that firm risk. The systematic is insignificant, which is expected. So while it's impacting the firm-specific risk, it's not having an impact on the firm's response to the market. So, so these, I guess, follow with kind of our thoughts of that this information is being conveyed about the company, and investors are then being able to have more clear information and then lower subsequent risk. With the market response, we also are going to look at trading. So as I mentioned at the beginning of the presentation, our look at the trading volume is going to stem from the fact that if investors are disagreeing on information, there'll be more trading as a response. If they agree on the information, there'll be less trading. So we follow that similar equation to what we had done with total risk. Here, however, we're just looking at the impact on the subsequent trading volume. And here's similar response. So we find the biggest effect over the short time frame of 10 days. But as you have more task-oriented speech, you're having that significant reduction in trading, again, because investors are going to have clearer the information, less disagreement on that information. And if we look at that first coefficient for that 10-day, it's going to economically mean about an 8% reduction relative to the average level of trading within our sample. So again, statistically significant, but also an economically meaningful reduction. The reduction in trading does hold through those 60 days. However, the magnitude does increase over time. So we assume that it is slowly trending back towards the mean level of trading as we move from the conference window. So we did find some evidence in the first part of our paper that market participants or investors do have a response, but we also want to look at our analyst sample. Again, these are going to be more informed market participants, and therefore how they understand or interpret the information might be different than just everyday investors. So in this part, we want to see the impact, or if there is an impact on task-oriented speech within these more informed market participants as well. So we are going to look at we're going to first look at the absolute forecast error. And again, since we know that analysts are going to use these conference calls for information, but they are more informed investors, we want to see if variations in this task-oriented speech do impact their subsequent forecast activity. So looking at the absolute forecast error, the differences between column 1, 2, and 3 are just control variables. So column 1, we're just having task-oriented speech with our fixed effects. 2 includes those linguistic controls, whereas 3 is going to be our full model. Across all variations, we do find that significant reduction in absolute forecast error after firms use more task-oriented speech. So again, focusing on that column 3, since that's going to be our full model, as we move from the bottom decile of task-oriented speech to the top decile, comparing that to the average forecast error, we're having a reduction of almost 21% in forecast error. So again, a pretty significant reduction in forecast error as a result of firms using more task-oriented speech in that main discussion of their earnings conference call. So it does, or this is our first evidence that not only does the increase of task-oriented speech impact investors, but it also impacts analysts' ability to gain information as well. Similar to what we had done with the sorts for total risk, we do the same thing here with absolute forecast error. As before, we have all 4 panels. So we have length, readability, uncertainty, and sentiment, but just for simplicity, I stuck with just presenting the sentiment aspect here. Similar to our patterns before, we find that as we move from low task-oriented speech to high task-oriented speech with these double sorts, we are finding that significant reduction in absolute forecast error. So again, just further kind of confirmation that as we move from low to high task-oriented speech, we are having that significant reduction in forecast error. The decrease is significant, again, with this LM sentiment measure. So it's reducing, in the biggest case, the forecast error by about 44% with that low or the most negative sentiment. Looking at length, readability, and uncertainty measures, we find a similar pattern. So we're also going to have that significant reduction in forecast error. So the largest reduction is 40% for length, 51% for readability, and about a 45% reduction for uncertainty. We also look at some of the forecast characteristics for analysts as a response to this use of task-oriented speech. So again, if we're looking at an increase in task-oriented speech, what is the impact on the revisions that take place, dispersion, and uncertainty that occur after? So with the revisions, again, we're finding compared to the average that column 1 is going to be about a 19% reduction with revisions. So that's moving again from that bottom task-oriented speech to the top. There's going to be lower dispersion and lower uncertainty. That last column is uncertainty common. What that's getting at is how the analysts obtain their information, so that private versus public trade-off. And so the insignificance in that column is going to tie to the fact that there isn't a significant difference in where they're getting the information. So we are finding lower revisions, dispersion, and overall uncertainty, but how they're obtaining that information doesn't seem to be dramatically impacted by this use of task-oriented speech. And then the last table is going to be this implied volatility. So we want to make sure that what we're capturing with task-oriented speech isn't something that's already known in the market or priced in the market. So we want to make sure or account for, I guess I should say, the implied volatility associated with the firm and see whether or not task-oriented speech also still holds when kind of accounting for that. So similar to the other double sorts, we have many panels, and for simplicity, I just presented the total risk, that first analysis measure here. So what is the construction of this table? So across the top, we're sorting based on implied volatility, so low, medium, high. And then across the left-hand side, we're sorting with the task-oriented speech measure, similar to the other tables. For this panel, what we're presenting is the change in total risk. So as we move from low to high task-oriented speech, we are finding that significant reduction in total risk. You will potentially note that the biggest reduction is happening amongst high volatility firms or high implied volatility firms. That does seem to be the case across all of our various measures. So we also include the other risk measures as well as the analyst characteristic measures. And it does seem that the biggest impact is happening amongst the high volatility stocks, but we do have some economically significant and statistically significant characteristics across the various levels of volatility. So it reduces uncertainty above and beyond what investors kind of already expect and have accounted for in the marketplace. I'm just going to quickly touch on a couple of robustness that we do have in the paper. So one potential concern is the industry effect. And so we do rerun everything with an industry adjusted task-oriented speech measure. So basically taking the firm level task-oriented speech and subtracting out just the industry average. This is above and beyond already in every table. We have industry fixed effects as well. With this adjustment, everything still holds. Another potential concern is a tone or the sentiment variable that we're using. So we do rerun everything, replacing sentiment with tone from text blob, and everything holds there as well. So just to summarize everything, so our main message is that this task-oriented speech measure does provide some important and unique information. So what we're arguing here is that how the firm crafts their message. So again, holding everything else constant, how they craft that message, how they convey that information to investors, the overall way that it's conveyed does have a significant impact on market participants' ability to disseminate and incorporate that information. So when a firm uses more task-oriented speech, we're going to have a reduction in the risk that's following. So not only is it a reduction in the total risk, we're finding a reduction in that idiosyncratic component. In addition, since there's more consensus on that information, there'll be less trading that's happening. So that's why we're seeing that significant reduction in trading subsequent to a firm using higher levels of task-oriented speech in their conference call. Not only does it impact market participants, it's also having a significant effect on our more informed analysts. So analysts also, or I guess analysts will significantly have lower forecast error following a firm using higher task-oriented speech in their conference call. And then not only does it impact the forecast error, the subsequent quarter, we're going to have smaller revisions, less disagreement, and overall, lower overall uncertainty amongst analysts. So that is everything for me, but thank you all for listening. I'm really looking forward to Josh's comments and any other comments that we have from everyone here.
Okay, thank you very much, Sarah, for this perfectly timed presentation. And indeed, as we move on to Josh's discussion, let me just remind you, everyone in the webinar, that the chat is open for your questions, and we'll get to them in the 15 minutes or so. So please, Josh, the screen is yours.
Okay. All right, well, thank you so much. I'm glad to be here, and I'm glad to be able to present, discuss this paper. And I really enjoyed reading through the paper. I think it's a really interesting paper. And I think it's just becoming more challenging over time to kind of identify unique linguistic characteristics of disclosures. And so I appreciate the authors kind of push in this area to kind of think outside the box, try to think of some new characteristic of disclosures that we haven't really studied. And I think what they've identified is pretty interesting. I think their use of machine learning to kind of identify parts of speech was kind of a really cool aspect of the paper. So I have a couple of suggestions and kind of thoughts about overall just some of the things that they're doing in the paper. I hope that the things that I say are useful and that you guys can incorporate some of these things into the paper. So the overview of the paper, I thought I would just kind of give my view of exactly what the authors are doing. And I'm a little bit more of I'm a visual learner myself, so I made this more into a graphic. So we have this measure of task-oriented speech. And what is this task-oriented speech attempting to capture? It's trying to capture how direct the disclosure is, how easy to comprehend the disclosure is, and what kind of impact will that have. It is supposed to enhance market participants' ability to process information, which should lead to lower uncertainty. And then the way that they're going to measure that is using return volatility, trading volume, and absolute analyst forecast errors, among some other analyst characteristics. So they're trying to see, what is the effect on individual investors, and then also on more sophisticated analysts. And what they find is that there's a negative correlation between their measure of task-oriented speech and return volatility, trading volume, and absolute analyst forecast errors. So it seems to suggest that the more task-oriented speech that you have, it really does kind of enhance the ability of these market participants to really understand what's going on, and that should lead to lower uncertainty. And so that's what they find. Now, I want to talk about first this measure of task-oriented speech. The basic idea here, and Sara can correct me if I'm wrong, I think this is what the measure is doing, is basically taking the number of nouns, adjectives, coordinating conjunctions, prepositions, determiners, and adverbs, and then dividing by the total number of words. And so the basic idea of this measure is that this higher TOS, or task-oriented speech, should represent more direct language, and that this more direct language results in greater comprehension, Whereas if you have a lower value of this measure, it's basically speech that's more misunderstood. And so the idea is if you have this more direct language, it increases interpretability of information, it enhances market participants' ability to process this information, and results in lower uncertainty. So I think the first thing that I will say is that I think that there's a little bit of a disconnect in the paper in terms of how this measure maps into these 3 bullet points. So what I mean is, why is it that nouns, adjectives, coordinating conjunctions, prepositions, determiners, and adverbs are necessarily representative of more direct language as opposed to other words that are included in a disclosure? And so I think doing a little bit more to kind of convince the reader why it is that this measure is the way that it is. There's a paper that was referenced in their paper that kind of talks about what the measure is supposed to represent, but there's kind of a disconnect between why it is that this specific measure is capturing the intended construct. So I would do more to just kind of help us understand why is it that having more adjectives, for example, is more direct as opposed to having fewer adjectives? Or why is it that having more prepositions helps you to be more direct in what you're saying? And that was just something I had a really hard time wrapping my mind around. And so what I did was I went to the appendix and I found this example, which was really helpful. It seems like to me like the basic idea is this measure of task-oriented speech is trying to kind of like hold the underlying information constant and instead focus on how the information is presented. At least that was my understanding. And as Sara was kind of presenting, it seemed like that was what she was also saying. It's kind of like we're trying to just say that the firm has some information. It's not necessarily how like the actual underlying information itself, but instead it's more the how or the way in which we are conveying that information that actually matters for how investors can understand that information. And then, so this is why I kind of felt like there was a little bit of disconnect between even maybe in the minds of the authors about like, what does this measure really represent? Because you can see on the left, this is their example of a high task-oriented speech, which they say is easier to comprehend, increases interpretability of information. On the right is an example of a low task-oriented speech where it's more difficult to comprehend, which leads to misunderstanding. And so as I was going through these, I was kind of like, yeah, it seems like I'm having a hard time seeing why I wouldn't be able to understand or comprehend what they're saying in the right-hand side example. And in the left-hand side example, it seems like I can understand that one just as easily. The thing that kind of stands out to me between these two examples is that there's a ton more kind of numerical and more information, I guess, in the left-hand side example than there is in the right-hand side example. So in these two examples, if this is really kind of what this measure is capturing, it's not that we're kind of trying to hold the underlying information constant, but it's really, and it's not kind of how the information is presented, it's more this measure of task-oriented speech is actually providing more information. They're actually giving you more information, not necessarily providing that information in a way that's more understandable. And so I think kind of reframing this idea of task-oriented speech, instead of around like holding information constant and it's how it's conveyed, but it's more in terms of that this, by using more task-oriented speech, or this measure of task-oriented speech, is kind of capturing the extent to which they're providing better information in their earnings conference calls. And so with that kind of foundation in place, I was a little bit concerned that that's exactly what this was capturing, because there is this concurrent working paper by Campbell, Zhang, and Zhou, where they look at the number of numbers in conference calls. And it seems like in the left-hand side example, there are a lot of numbers here, right? There's a lot of kind of more quantitative information that's being provided. And Campbell et al. Use that, like it's basically the same kind of idea. They say, do managers that provide a whole lot more numerical information in disclosures in their conference calls specifically, does that reduce uncertainty? And so it seemed like if I was kind of taking, and I know this is just two examples, but if I was taking these two examples and kind of saying, what is going to be the correlation with what Campbell et al. Are doing and with what this task-oriented speech is capturing, it seems like the correlation is going to be like almost 100%. Because on the left-hand side, it's basically all numbers. On the right-hand side, the only number that we get is this 2009. And of course, this is just kind of like, this is one example, and it's maybe there are other examples that don't kind of fit into this specific narrative, but I would definitely like encourage the authors to kind of go look at this Campbell paper and kind of see how they're discussing information in conference calls and about quantitative information and about just whether managers are basically providing more information and whether this measure of task-oriented speech is really just a way to kind of get at whether managers are providing good information versus bad information, not necessarily whether it's like how they're presenting the information itself. So it's not how they're conveying the information, but instead it's that they actually are providing more information inherently in the disclosure. Okay, so that's kind of about the measure. So my recommendations here would be try to disentangle the effect of specificity and numerical disclosure from this task-oriented speech, both I think empirically and theoretically, kind of understanding what is the difference between providing more information versus how you convey that information. And then also provide maybe different examples that highlight that unique nature of task-oriented speech versus non-task-oriented speech. So if you're truly trying to capture the difference in providing more information, then the example in the appendix is great. If you're really trying to capture something about how the information is conveyed or that one should be less easily understood than the other, then I think that you need to kind of really kind of evaluate whether the example you're providing, or really even in general, if there are examples of that, and if there aren't, then kind of maybe kind of take a step back and say, is task-oriented speech the right way of kind of thinking about this problem? And then just really help us understand better what the measure is, why specific parts of speech are more task-oriented than others, and kind of what that means. So in general, just kind of like understanding this measure of task-oriented speech is kind of one of the main issues of this paper, is just kind of, if we're going to provide a new measure to the literature, we really have to understand like what this measure is, what it's capturing, and why it should be capturing what it's capturing, and then show really that it really truly is capturing what we think it's capturing. Okay, so that's my talk on the measure itself. The authors also kind of shifting gears a little bit. The authors use just the formal presentation session to execute their analysis. And what they say is kind of the presentation is more scripted, it's intentional, it captures managers' intended message, and they kind of ignore the Q&A portion of the conference call because they say it's more spontaneous, it captures managers' answers to analysts' personal questions. And so the idea is that focusing on the presentation helps us understand how a firm intends that a market participant will receive and process information. So it's kind of like because we can focus on the presentation, it's the managers in advance of the call can prepare. This is how we intend that market participants can receive and process our information. I have a little bit of a different view on why we should, like, if we should be excluding the Q&A. And I think, you know, if the idea is that more direct language results in greater comprehension, I think from an information processing perspective, it shouldn't matter whether the firm actually intended to use task-oriented speech, but rather just like whether they use it at all. And so I think you could still kind of incorporate the Q&A into the analysis especially because we know that Q&As are super informative. They're incrementally informative to market participants relative to just the presentation session itself. So I think managers' responses during the Q&A could be even more important to market participants than the scripted presentation. And so I would just caution against just totally ignoring the Q&A. If the only reason that we're excluding the Q&A is because we're worried about capturing some unintended message that the managers have. And I just realized I said mangers, cool. I can't spell. So, but I would really kind of think about like, what is from the investor's perspective, does it matter whether the manager intended to use task-oriented speech or they actually used it at all? And so I don't think intention is kind of a reason to exclude Q&A in and of itself. So what would my recommendation be? I would examine tests using both the presentation and the Q&A, and then just kind of show robustness at least using the Q&A session. Let's see, how much more time? I got like 5 more minutes. So the next thing I'll talk about, I think the last major issue that I want to talk about is that the earnings announcement here is like just a big confounding event. And this is something that is true across every single conference call paper, or at least earnings conference call paper. We have this big confounding event, and it's the earnings announcement. And typically what happens is the earnings is announced, And then just an hour later or a few minutes later, the managers jump on a conference call to discuss what happened during the quarter. And so I went and looked up some papers for another paper that I'm working on. I kind of like wanted to just to do a really good literature review and understand like how many of the conference call papers in the last 2 decades have kind of focused on market-based measures surrounding the conference call, and how many of those are using intraday data to do their analyses, and how many are using like more long window events. And it looks like about half. So of the 21 papers that I found, and this may not have been comprehensive, I did it as thoroughly as I could, but I may not have gotten all of them. But 10 of those, or 47%, use intraday TAC data because of this issue with the earnings announcement being a big confounding event. And so just to kind of highlight this issue, I have a recent working paper that I'm working on with Rich Frankel and Jared Jennings at WashU. And what we find, what we do is we basically take the language of the conference call, and we try to identify what is that language in the conference call actually, if you look at how it's correlating with returns on the day of the earnings announcement. Like for example, we have the total 2-day return around the earnings announcement, the return during the pre-window before the conference call happens, and after the earnings announcement happens. So it's between the earnings announcement and the conference call. Then we have the return during the conference call, and we have returns after the conference call. And we use machine learning methods to basically come up with a prediction for how, like basically, does the language in the conference call correlate with the return over the 2-day window, over the pre-window, over the conference call window, and over the post window. So these here are machine learning predictions of intraday returns during these various windows. And what we find is that the total explained variation here for the machine learning factor over the 2-day window is about 4.76%. And almost all of that, or even more of that, it even does a better job here, is basically largely rehearsing information that was previously released with earnings. And so most of the language and the stuff that's talked about in the conference call is correlated with how investors are responding not to the conference call itself, but to the earnings information that was released previous to the call. And so this kind of, and you can see like based on these other, the return during the conference call window and the return during the post conference call window, where you would expect the language in the conference call to actually be influencing what's going on, like during those windows, there's actually very little correlation. There is something there. It does seem that investors are responding to information in the conference call, but if you actually take the language that's being used in the conference call, it's largely just kind of rehashing or rehearsing information that was released previous to the conference call. And so when I think about papers now in the future, and my dissertation used a 3-day window, I think. So I'm kind of pointing the finger at myself as well. But it's whenever we're kind of thinking about conference calls going forward, I think we need to be really, really careful about using long event windows because of this big confounding event, which is the earnings announcement. So what are my recommendations here? At a bare minimum, the regressions need to capture the earnings news. That was something that like just kind of stood out to me that was kind of missing from the regression analysis, is just there's nothing to really control for what is happening in the earnings announcement itself. So just even the bare minimum of like, what is the earnings surprise would be useful to include in the regressions. A kind of an imperfect solution would be to exclude day 0 or even exclude more days following the earnings announcement to reduce the effect of the earnings announcement. But I guess this is kind of a double-edged sword, because the further you get away from the actual earnings announcement and conference call date, you would kind of expect that the conference call would have less of an impact going forward. And it still doesn't really solve the problem that the earnings announcement itself could still be driving some of the volatility that's happening in the subsequent window. So I think like getting closer would be to use like an intraday short window measure. Campbell et al., the paper that I referenced earlier, they use returns to measure uncertainty, but they also use a 3-day window. So I think you actually have maybe like a reason to kind of get in here and make sure that what your measure is doing is something different from them. And also that it's kind of using a better window is to kind of focus maybe on their measure, which is basically just returns at the earnings announcement date, and focus on the returns just happening during the conference call. And then you can really have like a better identification to say like, this is within this very, very short window, we can see that investors are responding in the way that we expect them to, and that we can kind of control away, at least partially, the effect of the earnings announcement. there's not going to be a perfect solution here. I wish I could say there was a perfect solution, but for trying to understand volatility and uncertainty, this is kind of, I think, the best we can do. So overall, I think it was a great paper. It's an interesting textual characteristic. I think identifying these types of unique characteristics in this setting is becoming harder and harder. So I just, I applaud the authors for doing what they've done here. I really encourage you to just kind of do more to convince the reader that the measure is truly unique and that it captures something different than specificity or the numerosity, I think is what they say in the Campbell et al. Paper of the disclosure. And then incorporate tests using the Q&A, and then address issues with this confounding earnings announcement event. So thank you for letting me discuss the paper. It was a fun one to read, and I look forward to the discussion that follows.
All right, thank you very much, Josh. And Sara, would you like to take a minute to respond to any of the points?
Yeah, of course. So I second that. So first off, thanks, Josh, for all the feedback. Really appreciate all of that. So I guess I'll just go through like your three main points. So the first one, you kind of hit like the nail on the head. So I think one of our biggest challenges has been being able to convey like specifically what it's capturing with an example. So one of the challenges with using a linguistics-based like machine learning measure is that the algorithm is basically capturing something that isn't as easy to understand necessarily, as there's a lot of positive words, there's a lot of negative words. So I think that has been like our biggest struggle with making sure that we are capturing what we say we're capturing, and then also trying to provide the reader with enough information to convince them that actually is it what we're capturing, without being able to say like, here's a bunch of positive words, here's a bunch of negative words, since it is like that algorithmic type of motivation. Because yeah, why should certain ones capture it? So we tried to rely a bit more heavily on the linguistics literature for that, but maybe we need to emphasize it more, like more of their papers that use it.
Yeah, maybe just like pull in like some stuff from that paper to say like, why did they say that those things are related to task-oriented speech? It's kind of,
yeah.
And maybe I should have gone back and I didn't go back and read their paper. So like pulling in, just referencing that I think wasn't enough. You got to pull in some of that information into your paper to help us like really understand theoretically, why is it that these things are kind of task-oriented, whereas the stuff we excluded is non-task-oriented.
Yeah, no, completely agree with you. And the reader shouldn't need to read their papers. So yeah, we agree. I think we need to put more in there. And we took their, like what they call their word exactly. Yeah, but we definitely need to add more in there to hopefully help solidify and convince that. Going into, I think this also ties into one of the questions in the chat of looking at the number aspect. So first, I guess I should say with the task-oriented speech measure, it's just words. So none of the numbers are accounted for in there because they're not a word, but we haven't looked at any correlation between it and the number of numbers used. So that's definitely something like Josh, you hinted on a little bit. And then also like with the chat comment, also agree. So that's something we could definitely control for, but yeah, our measure is just like text, like no numbers accounted for. In this, I completely agree with you, Josh, about the Q&A portion. So that is definitely something we need to apply our measure to the Q&A. I just haven't gotten to it yet, but that is something we agree. We've heard it a couple of times, and we need to definitely do that. As you mentioned, if not for anything else, at least for robustness. And then thank you very much for the suggestions about the shorter time windows. So that's something we haven't done, but I do agree with you completely that it's definitely something we need to consider and incorporate. But yeah, thank you so much for all the information.
Yeah. So as we are hitting 5 p.m., let me just say a sort of few words concluding the official part, but it's not to say we all have to disconnect. We're more than welcome to stay on for up to another half an hour and just chat. So I would like to thank again Sara and Josh for joining today's webinar and for the interesting presentation and discussion, and for advancing this important topic. Also to remind you that in 2 weeks, we'll be back on air with our next event. And that one's going to be a bit special also in terms of formats, because we'll actually have not one, but 2 papers who are both on the same topic, equally timely, cybersecurity risk. And so it will be a kind of research slam, if you like. So each author presenting and then giving each other feedback on on the respective papers. So I hope you will join us in 2 weeks as well. Meanwhile, thanks a lot for joining today. Have a great rest of your day. And if you would like to continue chatting in a more relaxed or equally relaxed vibe, then please stay on the line. Thank you very much.